Hi, everybody. I am live here again with another Peter Schiff Show podcast. And, before I begin on this podcast, just want to mention that on yesterday's podcast, I didn't even realize that we had a lot of buffering that was going on the YouTube version. And a lot of people watched the YouTube podcast. So far, we have over 120,000 people who have watched the podcast on YouTube. And that's the one I did on Monday, which is a lot. That's more than I normally would have. So who knows where that podcast is going to end up being as far as total views. But it's one of my more heavily listened to podcasts in some time. But about 5 or 6 minutes got cut off, and I'm not even sure what was cut off. But if you go to Schiff Radio and listen to the podcast there, the entire thing is there, because while we're doing the live podcast on YouTube, we're also making recording. And then we take that recording and we post it to Schiff Radio, and we usually edit it out a little bit. And so it's a more polished version of what you hear live. But the buffering issue didn't affect it. So whatever I didn't say or whatever I said that didn't get recorded on YouTube is there. And I don't know what it was, but I'm sure it was important stuff, or, I wouldn't have said it. So I would encourage people, since apparently that was a popular podcast, a lot of people liked it, listen to it again. Go to Schiff Radio and give it a second listen. And, there's going to be some stuff that you missed. It's like, watching a movie again, only you're getting the outtakes. Only these really weren't deliberate outtakes. This is stuff that I had intended everybody to hear. But because of the problems that we had with the internet connection on YouTube, you weren't able to hear it. So again, just go to Schiff Radio and listen to it again. It can't hurt you, and there will be some bonus material that you did not hear. But anyway, let me get to today's brand new topics. And first of all, there's been some volatility in the markets, as is pretty much normal now. The Dow was up about 450 points today, but that didn't even erase all of yesterday's 600-point decline. But the big news that is completely being ignored is what's happening in gold stocks and in gold. I mean, today, the GDX, which I've talked about on this podcast as an index of gold miners, hit a new high for the year. In fact, it's at a new 7-year high. And if you look at how much the index has moved up since its March low of about a month ago, the index has now doubled. So gold stocks have doubled in price in a month. Now, granted, they doubled from a price that was low because they went down, but you would think that given the fact that gold stocks have doubled in a month, that there would be some coverage of the gold stocks. I mean, take CNBC, for example, which is a network that prides itself on being a network for investors, right? Trying to make sure that its audience knows about investment opportunities. You would think that they would be covering gold stocks. Like, hey, what? Maybe we should get our viewers to buy gold stocks. I mean, after all, what should be the most obvious no-brainer, right? If you are an investor, right, you're investing in the stock market, given what's going on right now, what is the obvious investment that you should make, right? The most obvious, and that would be gold stocks, right? I mean, clearly, everything that is happening right now in the economy with central banks is extremely bullish for gold, right? There is no question about it. In fact, I think just yesterday, Bank of America, their analyst came out and put a $3,000 price target on gold over the next 18 months. Now, this is Bank of America. This isn't Peter Schiff, right? This isn't some crazed gold bug. This is Bank of America. They're coming out and saying gold's going to go to $3,000 in 18 months. Now, it's at 1750 now. That is a big move. You would think somebody would be thinking, holy crap, maybe we should buy some gold stocks. Where will these gold stocks be? If you are an investment network and you're covering the stock market, how can you completely ignore the one sector that is really on fire? And in fact, it hasn't even started to burn compared to what it's going to do. You look at the charts right now for both gold and gold mining stocks, they are just breaking out. I mean, it looks to me like a moonshot can happen any day. I mean, talk about a coiled spring. You have that in these gold stocks. So we are about, I believe, to make this huge move. Yet nobody is talking about it. Nobody is saying, hey, buy some of these gold stocks. No, no, no. They're still focusing on the stocks that did well during the bubble, the stocks that did well as the Fed was inflating the bubble. Those are the names that they're constantly talking about. Why don't they try to figure out some of the new names that are going to succeed, given this new reality of endless money printing, QE infinity, 0% interest rates, multi-trillion-dollar budget deficits, fiscal irresponsibility on the part of both parties, right? Multi-trillion-dollar deficits as far as the eye can see. No opposition, both sides of the political aisle wanting helicopter money. How can you not see how bullish this is for gold and how you cannot be loading up, right? Talk about backing up the truck and buying these stocks. Yet they don't even discuss it. I mean, it barely even comes up. I mean, what other stocks have doubled over the last month? I don't know if there's any stocks other than gold stocks. I mean, maybe there's some. I mean, I don't follow them. I mean, but you have a whole sector that is doubled, not just a stock. All these stocks, some of them have more than double. Look, I know a lot of people, they want to dismiss what's going on in gold because people like me, right? We've been bullish on gold for a long time. And so people like to say, well, so what? I mean, Schiff's been wrong about gold. I mean, first of all, I haven't been wrong about gold. Gold's at 1,750. Yes, it's not at $5,000 yet, right? I started recommending gold that was under $300. The first time I was on CNBC with Mark Haynes, it was under $400. And I remember in that interview, and you can still find it on YouTube, but I started talking about gold. And Mark Haynes said, who cares about the price of gold? Why should I care about the price of gold? That's what he told me. Who cares about it? And I said, you should care. I pointed out, how much it had gone up, since the last time I was on the show when he said, who cares about it? And it was still under $400 an ounce. And so now it's over 1,700 and it's going much, much higher. But I said to Mark Haynes at the time, who has, since passed away, but I said to him, one of these days you're going to care. Now, apparently he didn't live long enough, unfortunately. But those of us who are still around who didn't care, people are going to care. But by the time they care, it's really going to be too late to salvage their wealth because the price is going to be so high. But people like to point to my $5,000 gold call. I was on CNBC back when they still had me on. It was probably maybe, 2010 or whenever it was. And gold was probably 1,600, 1,700. It was near the peak, right? And I've been recommending it for years. And I go on the show and they say, where's gold going to go? And I say, I think it's got, 5,000. I'll come up with a number. And they want to press me. Well, when's it going to get there? I don't know. Well, how long? I don't know. A few years is what I said. A few years. Obviously, it's been more than a few years. I mean, it's 2020 and we're not at $5,000. And so they like to say, oh, you see, Peter Schiff was wrong. And therefore, he doesn't know what he's talking about, right? He's completely worthless. He's a stop clock. He's been wrong about everything because he said gold was going to go to 5,000 and it didn't do it. Well, first of all, if getting one price prediction means that you don't know what you're talking about and nobody should listen to you, well, then nobody should have any guests on CNBC or any of these networks because there are plenty of people that have come on there and made a forecast about the price of a stock, and it turned out they were completely wrong. That doesn't discredit them just because they got one thing wrong. But let's go back and talk about why I got that forecast wrong, why gold isn't already at 5,000. And, I think it's going much higher. Look, I just said the guy from Bank of America says that it's going to be at 3,000 in 18 months. Well, what if he's wrong? What if it's at 5,000? I mean, that wouldn't make him wrong. That would just mean he wasn't bullish enough. But if gold can go to 3,000 in 18 months, who's to say it can't go to 5,000? Nobody. And let's say in 18 months, gold is at 5,000. Was I wrong in 2010 when I said I think it can get to 5,000 in a few years? Technically, yeah, because it's more than a few years. But I mean, I think that the fact that it got there at all in the time frame that it did would validate what I said. But you have to remember and keep everything in context, right? The reason that I thought that the price of gold, which was rising as a result of QE1 and QE2, the reason I believed at the time that it was going to keep going up was because I believed the Fed had no exit strategy. I believed back then that the Fed was never going to be able to normalize interest rates, which is what it was claiming it was going to do. And I believe the Fed was never going to be able to shrink its balance sheet like everybody thought it would do, right? Now, we now know that I was right about that, right? But at the time, very few people agreed with me. Certainly nobody of any stature on Wall Street agreed with me. Everybody agreed with the Fed. And so what happened in 2011, when Ben Bernanke really convinced all the fools on Wall Street and around the world that their monetary policy was a success and that the Fed was going to be able to unwind the balance sheet and normalize interest rates, gold collapsed, right? Gold sold off. It got all the way down to 1,050-ish by the end of 2015, all because people believed the Fed's lies. Now, was I wrong for knowing the Fed was lying? Because I said the Fed could never normalize interest rates or shrink their balance sheet. I was right about that. But I was wrong about other people realizing it sooner than they did, right? It was the people who believed that the Fed could shrink its balance sheet and normalize interest rates. They were the ones that were wrong, but because they outnumbered me, the price of gold went down initially instead of going up. And, for years, I assumed that people would figure out that the Fed had lied to them. I kept waiting for the markets to realize that the Fed could never do what it was claiming. And then even when the Fed started to raise rates in 2015, they waited all year. They just delayed. They were looking for 3 to 4 rate hikes in 2015. They only got one. And then they waited again a whole year to do the second rate hike. And the Fed kept stalling and making up excuses. And I kept waiting for the markets to figure out what I already knew, that the Fed could never accomplish its mission. But the markets didn't figure it out. And even after the Fed had to abort the rate normalization process and cut rates 3 times in 2019, and even after they had to go, give up quantitative tightening and go back to quantitative easing, even before the coronavirus, the market still didn't get it. Well, now with the coronavirus, with the Fed at 0, right, and with the balance sheet exploding, now people are going to finally get it, because it's impossible. Nobody can be so dumb as to not get it now, right? Now, I think it's going to take a little bit more movement in the market, but the world is going to figure out what I figured out from the beginning and what I assumed other people would have figured out a lot sooner. And that is that the Fed is going to print money indefinitely, that rates can never be normalized and the balance sheet can never shrink. It's going to grow in perpetuity. And so now gold is going to resume the rally that was interrupted by the false belief that the Fed could do that. And so now gold is going to get to 5,000. In fact, it's going to go much higher than 5,000. It's just taking longer than I expected, because the Fed was able to fool the rest of the world for a lot longer than I expected. See, I made the classic mistake of overestimating the intelligence of everybody else. I should have realized how dumb everybody else was going to be and actually believe that the Fed could do the impossible. Actually believe that the Fed could pull the table out from under the cloth and that all the dishes were going to stay levitated in midair, because that's what people believed year after year after year as the price of gold wasn't going up. And so I think, though, because it didn't go up in the past, people are just not paying any attention to it now. But they are going to be completely shocked by how quickly gold is going to go up once it breaks out and how much these gold stocks are going to go up. Look, as I said on my last podcast, it was a pretty big shock to see oil prices at negative $40 a barrel. Nobody probably ever thought they would see oil at negative 40. And by the way, Monday wasn't the final trading day of that May contract. It traded another day. It traded on yesterday. And the price actually moved back up from negative 40. It got all the way up to like positive $14 a barrel before settling at about 10. So anybody that had the cojones to come in and buy oil at negative, $30, $35 a barrel, to the extent that they could have gone in and bought it, because they potentially, if you bought it, you better be ready to take delivery if you couldn't get out. But obviously made a pretty good profit. But then the other month I talked about, the June collapsed. When I did my podcast on Monday, the June contract was still at $20. And I said, God, how could that be? Isn't there risk there? And the next day it crashed down to $10. Now it's back above that now. Let me see where June went out, $14.20. But now apparently they just introduced options with negative strike prices. So now people can actually hedge or bet that the price of oil is going to go negative. Now, will we actually see that again? I don't know. That may have been a once in a lifetime thing. I don't know. I mean, maybe we could repeat it again with this June contract going into expiration. But, now that it's happened once and people are kind of know it could happen, it probably won't. It was when nobody expected it to happen that it actually happened. Well, what nobody is expecting apparently is a big move up in the price of gold, and so that's what's going to happen. And of course, people don't realize why the price of gold is going up. It's going up because of all this inflation. But again, nobody can see this inflation. And that's another thing that people like to criticize me for, to say, oh, Peter Schiff was wrong. He's been wrong because he's been predicting inflation for all these years. We've had inflation for all these years. What do you think the Fed's been doing? It's been inflating the money supply. It's been expanding its balance sheet. This is the biggest inflation the world has ever seen. Now, has it produced the biggest increase in consumer prices? Not yet. It has produced increases, but yes, I expected larger increases. One reason for that is because the CPI is not picking it all up. But even if you take that apart, the inflation has been more confined to financial assets, real estate prices, stock prices, bond prices, things like that. It hasn't bled into consumer prices as much as it's going to, right? That is ultimately what is going to happen. But I haven't been wrong for warning about inflation for the past decade. It's the people who haven't been worried about it. They've been wrong. The ones that have been cheering on the Fed as they keep on printing all this money. And they claim we don't have to worry about inflation when we are inflating by definition. It's just that people don't worry about inflation when it makes them feel richer because the money is going into their stock accounts, right? When the stock market is going up, people aren't concerned about inflation. But once it starts really making prices go up, then they're going to be concerned. And yes, as I said on Monday, sure, some prices are going down right now. If you don't, you could buy a cheap ticket to Europe, but nobody's going. What difference does it make? It's like, I was doing some online shopping, and it's funny. I put out a tweet the other day. People think I made it up, like it was some kind of joke, but it wasn't. There was some short pants. I wear a lot of shorts here in Puerto Rico. And so there were some shorts that I like, and I saw them on sale, and they had my size, and let me buy a few of these shorts. And so I bought them, and I got a confirmation that I bought these shorts. Right? They emailed me back. It was I bought them on Nordstrom's Rack, right, as a sales site. So I bought these short pants, and I got a few colors. And they not only did they tell me I bought them, but I saw the charge go through my credit card. Right? So I bought them. I got a confirmation. And I paid for the shorts. A couple of days later, they sent me an email and they said, we actually can't deliver these shorts. We don't have them. And so we're sorry, but we're just going to give you your money back. So here's your money back. And so I thought that it was funny or ironic because I thought I was long those shorts, right? I owned them, I bought them, I got a confirmation. So I thought I was long some shorts. But it turned out that I wasn't long. I'm now short a pair of shorts. And it made me think of the gold market. Let me see. I don't. My face looks so. I don't know if there's really this much light coming in here. I don't know why there's so much light shining on me today. If this, I don't know how I look on this screen. But anyway, let me get back to this. Um, but I thought that this was a perfect example, given what I spoke about on the podcast on Monday with the paper gold market and the physical market. Because if you own gold futures and you think you own the right to actually have gold, or maybe you have an ETF or something like that, and you think you have gold. Like I thought I owned a pair of shorts, but they couldn't deliver me the shorts. Well, what if the shorts in the gold market can't deliver the gold? How might you get settled? Well, they'll just give you some paper, here's your original money back. Well, what about all the profits? Right. I didn't want my money. I wanted a pair of shorts. I didn't get the shorts. I got my cash. Well, what if I bought some gold and they end up saying, well, we don't have the gold. We told you bought it, but we don't really have it. So here's your money back. I don't want my money back. I want my gold. Right. So the key is, if you want gold, go out and buy it. Don't have a deal with a third party who may not actually have the gold to deliver. Make sure that you own your gold. But the point I was going to try to make on the sale is, one of the things I notice when you're on these sale sites, you'll see something that's on clearance. Oh, look at this deal. This is 80% off. Let me try to buy this. Oh, here's a pair of shoes that are 80% off, right? And you go on there and they're 80% off if you're a size 6 or a size 13, right? I mean, all the normal sizes are gone, right? You can't get 11 or 10 and a half or 10, right? So does it matter that the price is so low if they don't have my size? Of course not. What difference does it make if the price of something that I'm not buying goes way down? I was making that point yesterday on oil. I mean, oil's down right now. Gas is cheap, but nobody's buying it. So what difference does it make if the price of something that no one is buying is going down? What matters is what's happening to the price of the stuff that we are buying. And the price of the stuff that we are buying is going to go way up because of what the Federal Reserve is doing, what the U.S. government is doing. And even if it didn't do it in the past decade, it is going to make up for it. Because not only are we going to feel the effects of all the inflation of the past, right? QE1, QE2, QE3, all the delayed effects of that inflation, we're going to feel that. But now we're going to feel all the added effects with a much shorter lag of the massive inflation that is going on now. So we'll see if we get an explosive breakout in these gold stocks. They've doubled in the past month from the lows. Maybe they'll double again in the next month. We'll see. We'll see what kind of move it takes before the mainstream even wakes up and starts talking about these stocks. Like maybe somebody, should buy these stocks. Have somebody come on and, come up with some names. I'm watching all day and nobody's coming out there. They're ignoring this. They're ignoring one of the greatest investment opportunities out there. I mean, you're studying the stock market and you have this one sector that stands out like a sore thumb. This is where people should be investing. You would think that, if you're focused on finding investment opportunities, you would want to highlight this. But it just shows you how little understanding there is out there about what's going to happen in the mainstream of the investment community. Now, another thing that happened, I think today, or was it last night? But the Senate now has voted to approve the latest bailout bill. The price tag is now up to $484 billion. Remember, I said this was going to happen. So the Republicans wanted to add another $250 billion to the small business loans, the Paycheck Protection Plan, the PPP, because they ran out of money. They initially budgeted $350 billion, and that went like hotcakes. And in fact, there's been some outrage, about the companies, big companies, Shake Shack apparently is so embarrassed that they took $10 million that they're giving the money back. And, you might think, hey, how did Shake Shack even qualify in the first place? I thought you're supposed to have fewer than 500 employees. Shake Shack has 8,000 employees, publicly traded company. How do they qualify as a small business? Well, apparently in that industry, as long as you have fewer than 500 employees per location, it doesn't matter how many total employees you have. You can have 1,000,000 as long as you don't have more than 500 of them in any one location. I mean, look, they don't have 500 people in each Shake Shack restaurant. Maybe each restaurant has 50 people. I don't know. But I wouldn't describe Shake Shack as a small business, yet they got $10 million that they weren't going to have to pay back, right? Because as long as they didn't fire their people, which they probably weren't planning on doing, that's a gift. Why are we giving Shake Shack $10 million? Now, apparently, the bad publicity scared the hell out of them. They didn't want people boycotting their restaurants, right? So they gave the money back. The problem is they qualified for it in the first place. I told everybody listen to this podcast, this was going to be a bonanza. This was going to be a feeding frenzy. In fact, if you actually read the language, in order to qualify, because I looked at it, remember I said, well, maybe I'll just get some money for my companies, right? I'll just get some bailout money. I'm a small business. I mean, I legitimately am a small business. I don't have any companies that employ 500 people. So I qualify. But in order to get the money, you have to certify that the funds are necessary to support the ongoing operations of your business. Now, personally, the way I would read that, right, is that the funds being necessary to support the ongoing operation of my business would mean that if I didn't have those funds, that I couldn't operate my business, right? That those funds would be the only way that I can save my business. Without that loan, I couldn't operate my business. I mean, I think that's the intent. But of course, a lawyer can clearly try to say, no, that's not what that means. I mean, it just means that, we need this money to operate the business. And if we didn't get it, we could get it from some other place. Like maybe we could just pull it out of our savings account. But, it's necessary to operate the business without having to deplete our savings. Or maybe, hey, if we didn't get this money, we would have to borrow it legitimately, or we'd have to sell stock. So we're going to use this money as the necessary money to operate our business instead of other money. You see, the way I interpreted it when I read it is that, do you actually need the money? I mean, yes, you could use the money to make payroll, but do you need it? See, in my circumstances, my income hasn't gone down, right? And my people are working from home, right? So I don't need any of that money. I mean, sure, I can take it. I could have it. Money is fungible. I could use that money to pay my employees and then use the money I was going to employ my employees and keep it for myself, do something else with it. But I knew I didn't technically need the money, right? Because my business was fine. But I'm sure you've got other Fortune 500 companies, public companies that have access to all sorts of capital that could get money, that are getting this money. There is no way that they need the money, right? Yes. Can they use the money? Sure. Everybody could use $10 million. Why not? Sure. $1 billion company, you're going to give me. But somebody had to certify that they needed the money. And without it, the business couldn't operate, which is all BS. I mean, I think that there's all this fraud. But if you have Fortune 500 companies that are going to certify that they need this money when they clearly don't, right? And they're not going to be prosecuted. Is anybody going to be prosecuted? No, right? If a company with a big spotlight can lie and say, we need this money, when obviously they don't technically need it, there are all sorts of ways that publicly traded companies, big multi-billion-dollar companies, can get money, right? They can tap into the public markets. They can sell bonds. They can sell stock, or just have the cash. But if these big companies can BS the certification and claim that this money is necessary, then anybody can make that claim. I mean, I could make the claim too. There is nobody who cannot claim that they need this money, and how the government could say, well, that was fraud if these Fortune 500 companies are getting the money and they clearly have other means of funding the operation of their business. So this is a giant fraud. But they ran out of that $350 billion initially. And so the Republicans wanted another 250 billion and a clean bill for 250 billion. And the Democrats said, no, 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 no. We want to load it up with some more pork, even though the whole bill is pork. They just didn't think it was porky enough. And so they wanted more of it. And the Republicans were like, no, no, this is terrible. We're not going to do this. Well, what happened? Exactly what I said was going to happen is that Donald Trump made a deal with the Democrats in Congress, with Nancy Pelosi and Chuck Schumer and that whole crew. And they decided to incorporate much of the additional pork barrel spending, money for the state governments, money for the hospitals, or money for testing, whatever it is. It's a grab bag of money. And so now the bill is not 250 billion, but 484 billion. It's almost twice as big. And now the Senate passed it, the Republican Senate, and the amount of money that's going to small businesses has been upped. The original bill was 250 billion. Instead, it's 320 billion. So when Donald Trump got in a room with the Democrats, he agreed to all this extra money that the Democrats wanted, but threw in a little extra money for the Republicans. So we got the worst of both. We got more spending on what the Republicans wanted, and we got more spending on what the Democrats wanted. The deficits be damned. The cost of government be damned. And I said this from the beginning, even before coronavirus. You go back and look at some of the commentaries I wrote. I warned that Donald Trump was going to work with the Democrats to be a massive, big spender. And, you know, if Trump wasn't president right now, if Hillary Clinton was president, this might not have passed. Because if the Republicans had the Senate, they could have stood united and blocked it, right? Because if there was a Democrat in the White House, the Republicans might have had some balls, right? And they could have said, we're not going to approve this massive deficit spending. And they could have stood united against a Democratic House and a Democratic president and protected the country from this legislation. But because the president is a Republican, the president can now get enough Senate Republicans to go along with the Senate Democrats. So even if you get a majority of Republicans who don't like this bill, it's not going to stop it, because you're going to have enough Republicans who are going to stand behind a Republican president. They want to support the president. So when you have a big government president like Trump, who's pretending to be a Republican, you're going to get this type of massive government spending. And that's exactly what I warned about long before anybody ever heard about the coronavirus. But so now we have this $484 billion additional plan. This is not the end of it. There's more coming. But now all this money is just going to get printed, and it's just going to get spent, and none of it is going to help the economy. All of it is going to help the price of gold. It's going to help these gold stocks. I mean, these guys, again, are clueless. They cannot see the most obvious trade that's probably ever been teed up, and no one is taking advantage of it. And again, I think it's because they don't think it worked. Oh, gold didn't go up last time. All those gold bugs were wrong. We weren't wrong. We were right. And the price of gold has gone up. Remember, the people who were convinced that the Fed could normalize interest rates and shrink his balance sheet, you go back to where they thought the price of gold was going to be. See, I was saying gold was going to go to 5,000. Well, you had a lot of experts on CNN, CNBC, who were saying 1,000, 800, 700, 500, 300. How wrong were those guys? They want to rub it in my face that gold isn't 5,000. Find the guys who are predicting 300. Those guys are still coming on. Tell them how wrong they were for thinking gold was going to 300. Why did they think that? Well, because they thought the Fed was going to normalize rates and shrink the balance sheet. They were dead wrong about that. I was 100% right on my forecast that the Fed would be unable to do either of those two things, which everybody else thought they would do. And we're a lot closer to 5,000 percentage-wise, really, than 300 or 500, any of these crazy lowball numbers. At least I got the direction right? I thought gold was going up. Yes, it hasn't gone up as much as I thought it was going to go up as quickly, but now it's going to go up even more, right? But meanwhile, everybody still wants to, play the bubble that's popped, look for the stocks to buy, the same stocks that worked before. Meanwhile, look at the multiples now. The valuation of the S&P 500 is off the charts because the price is really not down very much since the peak, but earnings have imploded. And we're about to find out just how big an implosion it was. But I also think that a lot of people are about to be very disappointed because people think that, the economy is like a light switch, just turn it on, turn it off. We're about to see that light switch doesn't work because you have some of these states now, like Georgia, is about to reopen up a lot of businesses that have been closed, right? Georgia's going to open back up restaurants. They're going to open up movie theaters, bowling alleys, gyms. There's some that they're still not opening. They're not opening bars, but there are a number of businesses that are going to be reopened. And what I think the risk is that they reopen these businesses, but people don't show up. I mean, why would you? I mean, I think that we've really scared the hell out of so many people about the coronavirus. The minute they say, okay, everybody can go to a movie theater, how many people are going to want to go? I mean, who's going to want to be the first person to go? I mean, I would think at a minimum, people would say, I'm going to stay away from those movie theaters, stay away from the restaurants. Let me give it a few weeks or a month and see what happens. Let's see if people get sick or not. I mean, I'm going to wait. I don't want to be the guinea pig, right? I want to just wait. And of course, if everybody has that attitude, they don't want to be the first one back. They want to wait and let other people test the waters before they make a decision. Well, then no one's going out. And I think the same thing is going to happen nationally. But the other problem is, let's say the government says, okay, you can reopen your restaurant. Good luck getting your employees back to work. I mean, you got people that are making twice what they used to make being unemployed as they made working. And, I imagine, I haven't really worked in a restaurant, but I mean, it can't be that fun a job. I mean, it can't be that, personally satisfying and rewarding. I'm sure most people, if they can make even the same money not working as working, they would just assume not show up, especially if you're just like doing the dishes in the back. You're not even, you're just washing dishes all day. I mean, I don't think that's an emotionally a satisfying, intellectually stimulating job. Who the hell wants to do that job? You only do that job to get paid. Well, if you can get paid the same or more without doing the job, that's what you're going to do. So how are a lot of these entrepreneurs going to get their workers to come back to work? Even if the customers want to come, the workers aren't going to want to come. Now, I know a lot of people say, well, but they wouldn't technically be unemployed. Yeah, they are. Remember, they're allowed not to work because they can say, I'm staying home, I'm taking care of my kids. My kids aren't in school, or I got a relative that's sick, or you got all kinds of reasons now that you could just blame it on the coronavirus. And you don't have to go back to work. Even if your boss wants you to go, you can continue to claim that you're unemployed and keep collecting that money. So none of this is going to work, these attempts to restart the economy. And so that is going to be, I think, a big negative for the markets, because they're going to see on a state-by-state basis that this isn't working. And so if it's not working on a state-by-state basis, then it's not going to be working on a national basis. And so that could be another catalyst to push the stock market lower, right? Because, everybody has been betting on this recovery, and I think they're betting wrong. As I said on the last podcast, the only thing the stock market has going for it is the Fed. That's it. This rally is 100% made by the Fed, which is all the more reason to understand that the market is much more bullish for gold stocks and gold. Because if the only thing driving the markets is inflation and money printing, which businesses benefit the most from that, right? It is the gold businesses, the gold mining business, right? If that's the only reason, if the only reason the markets are going up is because of inflation, right? And I'm talking about real inflation, right? Which is money printing, right? If printing money, if massive budget deficits, massive money printing, QE infinity, right? The government dropping money from helicopters and backstopping every market. If that is the only reason that stocks are going up, right? Earnings are imploding, the economy is imploding, yet stocks are going up anyway, because despite all this, the Federal Reserve is printing all that money. If that's the only reason that stocks are going up, then which stocks should you be buying? The gold stocks, because this is the perfect environment for gold. So the stocks that will benefit the most from what the Fed is doing are gold stocks. Yet those are the stocks that nobody seems to recognize or understand are going to be the beneficiaries, which is another reason why people are about to be completely shocked by how big the rally is. And I know, unfortunately, there are some people who bailed out on their gold stocks. Obviously, when gold stocks got clobbered last month, that was because people were selling. And there were a lot of people, even some people who were bulls on gold, right? They were saying, you know what? Even though I think gold's going to go up, I'm going to sell these gold stocks because, I'm worried about the stock market going down and these gold stocks are going to get dragged down with the stock market. Or they were saying that the coronavirus is going to disrupt mining. And so I'm going to sell my gold stocks. What was I saying on this podcast? That anybody selling their gold stocks for those reasons was making a huge mistake. But the fact that even gold bulls were throwing in the towel on gold stocks, what better contrarian indicator did one need, right? Even the people who were bullish on gold were too afraid to buy gold stocks because they were worried that gold stocks were going to follow the market lower. Now, I didn't think they would continue lower. I thought the lows were in for the gold stocks. But you know what? It didn't matter if they went down because they weren't going to stay down. What difference does it make if stocks that you have no intention of selling go down before they go up? It doesn't matter. I had another unfortunate conversation today with a client who liquidated his entire account in mid-March. And for some reason, I never got to talk to this guy. I mean, I had most brokers, if they have a client that wants to, make this kind of mistake, I generally intervene. I get a chance to talk to the client and try to talk him out of a bad decision. In this case, for whatever reason, I never got a chance to talk to the guy. So he just made the bad decision. And I talked to him. I said, look, you just gotta bite the bullet and buy back the stocks you sold, even though they're 20% higher you never should have got out. But, in talking to the guy, the reason he wanted to get out was because he was concerned that the market was going down. So who cares? He's like, well, I wanted to get out and just wait for the dust to settle. I wanted to wait. Yeah, I didn't want to have all this volatility. Well, all right. So you wait for the dust to settle. You wait till nobody's nervous anymore. You wait till nobody is panicking and selling stocks. And then you want to buy them back in. Well, obviously the price will be much higher. What is the point of selling your stocks to just wait to buy them back at a higher price? Just hold on to them. Why sell them and buy them back at a higher price? Now, I know people are afraid, but they might go to a lower price first. What difference does it make? I've rarely seen, right, when stocks are dropping and people panic and get out, they rarely get back in at a price that's lower than where they get out, even if the stocks go lower initially, because they're just glad they sold, right? You sell your stock, or let's say you sell a stock at 10. It was at 15 and it goes to 10, and then you sell and then it goes to 8. You're not buying it back. You're like, God, I'm glad I sold at 10. I'd be down another $2, right? So you don't buy it back at 8. Then it goes to 7. Whoo, I'm really glad that I got out, right? Next thing you know, it's at 12. They didn't buy it back. Now it's at 12. Well, it's volatile. They don't do anything. Then it goes to 15. All right, let me wait. I'll wait for it to go back to 10. I'll get back in. Then it goes to 18. By the time they buy it, even if they buy a pullback, maybe they buy a pullback from 18 to 15. That's 50% higher than where they sold it. But of course, what may happen is they never buy it back. I think that's what's going to happen, unfortunately, to some gold people. Not if I had anything to do about it, but there are going to be people who sat on these gold stocks for years and years and years. They threw in the towel last month, and they're never going to buy back because they're never going to get a chance to buy back anywhere near where they got out. They got out at such ridiculously low prices, right? And so they're just going to watch as a spectator as these stocks go up. And of course, it's happening with other stocks, not just gold stocks, but not on as a big a move, right? All the stocks have recovered from those lows. They just haven't recovered as much as gold stocks. In fact, most gold stocks now, the big ones, have now made 52-week highs. They're making 7-year highs. But if you look at these charts and you just, look at a monthly chart, even though these stocks are at 7-year highs, they're still near the lows. That's how beat up these stocks have been since 2011. So I think we're going to catch up to those 2011 highs very, very quickly. Before most people on Wall Street really start buying any gold stocks, they're going to be paying all-time highs on these big stocks. The good news is, though, there's still room. There's still some room. If you act quickly, you can get money in. You can get into, my gold fund, the Euro Pacific Gold Fund. You can buy individual names if you want. You can have a separately managed account that we're managing. And even some of my other funds, my value fund, my dividend fund, these funds have allocations to gold stocks, a small allocation, but even a small allocation when you have gold stocks doing this well. And this is just the beginning. I think gold stocks, there's a lot more upside to go. I mean, we're barely getting started, even though we doubled from an insanely low price. Again, look at a long-term chart. We are so much closer to the lows, the bear market lows, than the last bull market highs. So you got a long way to go just to make new highs. And we're not going to stop at new highs. We're going much, much further. Because as I said earlier in this podcast, nobody is going to believe that the Fed has an exit strategy like they did in 2011. Nobody is going to believe that the Fed is going to go back to normal on interest rates. We will never go back to normal. That's impossible. And I don't even think the Fed is going to pretend that that's even possible. That's the only reason. It was the false belief that the Fed could do the impossible that gold sold off. That's what kept the dollar from collapsing, because people believed something that could never happen was going to happen. Well, they're not going to believe it next time, and the Fed isn't even going to try to pretend that it can do something that it so obviously cannot do. So this time, you're not going to have a ceiling on the price of gold like we had before, right? This time, there isn't going to be a floor underneath the dollar like we had before. The bottom is going to drop out of the dollar, and that means gold is going to go through the roof. And a lot of people who have been saying, oh, Peter Schiff was wrong because he was saying gold was going to go to 5,000. Yeah, because it go to 10,000. It's going a lot higher. And that's fine. People can think I'm wrong all they want. Meanwhile, in order to believe that I'm wrong, you have to ignore all of the things over the last 10 years that I've gotten right. All the things that I thought would drive gold to 5,000. All those things have happened, right? All the things that people who thought the price of gold was going to go down, none of those things have happened, right? So I got all the stuff right, yet the price of gold hasn't moved up yet. And people think, aha, but because the price of gold hasn't gone up, I must have got everything wrong. But no, all the things that I thought would happen to drive the price of gold have actually happened on a bigger scale than I thought. So it's going to happen. It's just happening a few years later than I thought. And it simply means that more people have the opportunity to take advantage of what's about to happen. Anyway, that's it for now. Take care, everybody.